Axiata Group posted a net loss of 106.38 million ringgit for the second quarter of FY22 due to significant foreign exchange losses contributed by mobile operations in Sri Lanka. It made a net profit of 277.76 million ringgit in the second quarter of FY21. This is the second consecutive quarter that Axiata has been in the red, with a quarterly loss widening from 42.97 million ringgit in the preceding quarter ended March 31st, 2022. Revenue grew 4.9% year-on-year to 6.7 billion ringgit on higher income in all geographical segments except for Sri Lanka. For the first half of FY22, it incurred a net loss of 149.35 million ringgit versus a net profit of 353.32 million ringgit a year ago, while revenue rose 5.8% to 13.17 billion ringgit. The telco did not declare any dividend for the first half. Still, the group said it is confident that it will likely exceed its headline key performance indicators of mid-single-digit growth for revenue and high single-digit growth for earnings before interest and tax based on operational performance, though currency devaluation and inflation will have an unfavorable impact on the group's reported profit after tax and minority interest in 2022. Axiata's share price closed 1.62% lower at 3 ringgit 3 sen, giving the group a market capitalization of 27.8 billion ringgit. Enforcement of amendments to the Employment Act 1955 to provide for shorter working hours has been postponed from September 1st to January 1st next year, according to a Bernama report. Human Resources Minister Datuk Sri M. Sarawanan said this was decided by the Cabinet today after industries and employers unanimously asked for the postponement. Apart from reducing working hours from 48 to 45 hours per week, the amended law will also increase maternity leave from 60 days to 98 days and paternity leave from 3 days to 7 days. The minister reportedly said engagement sessions with stakeholders found that industry players, especially employers, need a bit more time for the amendments to come into force because they were still dealing with the issue of shortage of foreign workers and are recovering from the COVID-19 pandemic. Therefore, Putrajaya decided to push back the deadline to ensure that businesses and jobs are not at risk. He also reportedly stressed that this would be the final postponement. Petronas Gas or PETGas saw its second quarter FY22 net profit slip 9.57% to 396.5 million ringgit, despite a rise in revenue due to the impact of unfavorable foreign exchange movements and higher effective tax rates from Cukai Makmur. Quarterly top line climbed 8.7% to 1.5 billion ringgit on higher contribution from the utilities segment. It declared a second interim single-tier dividend of 16 cents per share. For the first half of FY22, PETGas's earnings fell 15.53% to 807.08 million ringgit, despite cumulative revenue climbing 8.76% to 2.96 billion ringgit. PETGas said demand for gas and utilities is expected to improve as the country transitions to an endemic phase of COVID-19. It expects its performance to remain resilient in 2022, though it warns the anticipated rise in Malaysia's LNG unit export price, the weakening trend of the ringgit against the US dollar, and imposition of prosperity tax may further impact overall group performance. PETGas's share price rose 0.11% to close at 17 ringgit 52 sen, giving it a market capitalization of 34.5 billion ringgit. Bumi Armada posted a 33% jump in second quarter FY22 net profit to 186.25 million ringgit, mainly due to higher revenue and favourable foreign exchange movements. In a bourse filing today, Bumi Armada said its top line for the quarter rose 4.5% to 618.43 million ringgit, due mainly to higher progress of completion of the subsea construction contract work in the Caspian Sea in the second quarter of FY22. The company did not declare any dividend for the quarter. For the 6 months ended June 30th, 2022, net profit rose to 372.01 million ringgit on the back of 1.15 billion ringgit in revenue, down 1.8% from the previous corresponding period. In a separate statement, Bumi Armada CEO Gary Christensen said the company's floating production and operation fleet continued to deliver stable operations in the second quarter and will continue to focus on safety, sustainability, operational excellence and financial discipline. With high energy prices and an improved financial position, he said the company is pursuing various new projects. At the end of the second quarter, Bumi Armada's future firm order book amounted to 13.1 billion ringgit, with additional optional extensions of up to 9.4 billion ringgit. Its shares settled up 3.85% at 40.5 cents today, valuing the company at 2.4 billion ringgit. Glove manufacturer Supermax Corp says its Canadian unit has inked a partnership with Minco Wholesale and Supply. Under the deal, Minco will distribute in the Canadian marketplace products by Supermax Healthcare Canada, including rubber gloves, masks, non-woven cotton medical products and protective apparel, including isolation gowns and hairnets. In a joint statement, Minco and Supermax Healthcare Canada said some of the most popular products included in the offering are the lattice Aurelia brand nitrile, vinyl and latex gloves. According to Supermax Healthcare Canada's website, the company is Supermax Corp's division based out of Malaysia. Supermax Corp exports to over 160 countries worldwide and sells a range of brands such as Supermax, Aurelia and Maxter. At the close, Supermax Corp's share price fell 0.66% to 75.5 cents for a market value of about 1.99 billion ringgit.